Hey traders, in this video I'm gonna be pausing for a second and looking to reinforce this notion of the different types of market profile that we can find: directional, non-directional, volatile or non-volatile, that allows us to come up with the possibility of 4 different scenarios: a trend with high or low volatility and a range with low or high volatility. So let's look at some markets. I'm going to be picking some of these assets randomly, and I will be explaining my decision-making process so that we can get a better understanding, a better gauge of what type of environment we are facing in every market. So let's start by looking at the dollar against the Canadian. We are shifting gears here into Forex. So the dollar against the Canadian, this has been a phenomenal market to look for both pullbacks and breakouts. Now, if you are considering and you catch those TT setups, also that is acceptable. Why am I saying that? Because this is a market that, in my opinion, has been on a rather descending volatility, yet trending. And you can tell that by, despite we had a bit of an increase in volatility through these 3 candles or 4 candles, well portrayed through the candle range size. After that, you will notice that the majority of candles have been respecting the volatility upper threshold parameters. So if you come actually also to the lower time frame, you will notice that not only the BBW had been on a descent, but also we had been pausing and stabilizing volatility for a significant period of time, and we remain pretty close to that average volatility on the BBW area. Therefore, this 8-hour, it is what I consider or label as a non-volatile trend, which is a phenomenal, these are phenomenal conditions to aim and take trades of the pullback, of the breakout, and you can tell the type of results that could have been achieved. Now, when it comes to the dollar against the JPY, next market, next major, this is not a trend with low volatility. In fact, I would consider this to be rather choppy. I don't see this candle right here as having had a significant acceptance beyond this low. Now, that being said, we did break structure of that previous isolated low right here. So in my opinion, and that is something that we can always revisit the metrics, and that will be our ultimate clue. This is a market that right now of the daily is trending lower, but with high volatility. Whenever that is the case, you want to stay away from pullback entries. Okay, if you see a diminishing volatility of your entry time frame, you might consider a breakout type entry, but we haven't seen that either. So this is the type of environment to the downside, looking for shorts of trap patterns. This is by far the best type of setup that would be workable in this kind of environment. The 8-hour, you're going to actually be hard pressed to find a lot of trap patterns of the 8-hour, but case in point, we did in fact have a TT setup right here of the daily, nicely visible. So let me just give you those 3 points. We had FT1, FT2, FT3, retest of the FT1, and right here we've seen a revisit of the lows. If you want to know more, find out more about all these nuances that involve trading the TT, you can just visit the course and you'll have full access to it. Okay, so that was the dollar JPY. Let's look into the Aussie US dollar, another major that has been making significant movement. Now, in my opinion, this is a market that has been trending really, really nicely, and ever since this low right here, I would say that for the most part, we've had a very nice non-volatile trend in this market. Therefore, as you come into the lower time frames and you spot either pullbacks, breakouts, or TT, they're all going to be acceptable, because first and foremost, we've recognized that we have optimal conditions to seek out this type of setups. And right here, you will notice that we did have an acceptable breakout. And you could also look into trading the TT, as I said. And the TT actually was available right, let me see. Well, not quite, no, not quite. We didn't really have a TT of this 8-hour time frame. But the bottom line is that we're starting to get better at deciphering the type of environments that we are facing by looking at both our higher time frame or time frames and the entry time frames. Now let's look at another market, one that hopefully is not that correlated. All right, so here we got the euro against the US dollar. As you can tell, the trend is clearly and visibly lower. Okay, so that's number one. We've already covered what the direction of that market is. But notice that in terms of the, let's just see, in terms of the market accepting into lower levels, now we're starting to struggle around the 1.18, just below it. And we seem to be forming what is typically known as a range. Therefore, in my opinion, this is a market that is suboptimal to be taking trades off that entry time scale unless we break lower. Why? Because I personally conclude, and you have all the rules that are necessary, you'll notice that many times I don't necessarily have to add all the different indicators. For instance, here, if you want to confirm whether or not we have a range, remember, we have in different time sequences 2 rejections at that point with a reduction in volatility, and that reduction is clearly visible through the Bollinger Band the lower side of it. Okay, so let me just hide that, otherwise it's just unnecessarily clutters my chart. Whenever I need it, I just add it and then I hide it back again. So having a low range, a low volatile range, this is the type of market where taking pullbacks is going to be asking for trouble, essentially. Okay, so let's look into another market. In this case, we got the pound against the Australian dollar. Now, right off the gates, what I noticed in this market is that we had a range and we broke outside of it through this candle right here. So that, to start with, that was a valid breakout. Okay, now with that said, once we get into this stage where we have price trading outside of this range, you can start looking for either pullbacks or breakouts within the lower time frame, and even also the TT pattern. Okay, so right here you will notice that it appears as though there was yet another valid breakout after finding this consolidation above this previous range, this broad range of the daily. So there you have it. That's another breakout, which makes it valid. Okay, and so yeah, that's just kind of just to recap. Pound Australian dollar, I would label this market as being in a rather low volatile trend at the moment. Okay, remember that the BBW remains pretty suppressed, just breaking above the BBW, so that would not justify me calling this market as a high volatile trend. All right, so with that being said, hopefully this is helping you and reinforcing some of the lessons and concepts that I've been emphasizing through the situational awareness, especially in the second part. If you have any doubts, please get back to me. Remember that at the end of the day, it is going to defeat the purpose of trading altogether if you're going to be overly fixated in a strategy without first understanding what is going on in terms of both the direction of the market. We're looking at direction through the trend and the momentum. That helps us to define whether or not it is justifiable to get engagement as per the trend that the market is following and that path of this resistance, and also the volatility. The more volatility that we have present in a market, the more that we have to adjust our strategies to accommodate for that volatility. The less the volatility, as in the case of the dollar against the Canadian, the more, in a way, the more predictable it becomes taking certain trades derived of strategies that I teach, such as a pullback or breakout in this kind of environment, because we have a constant and regular imbalance of flows in the direction in favor of the US dollar against the Canadian in this case, okay? And you should interpret market information and price chart data in this way every single time that you open up a chart. The more that you practice these rituals, then the more that you're going to be essentially just opening up any chart and understanding the type of order flow that is going to be present in that particular market. All right. Until the next video, is bye from me. Cheers. Hey traders, Ivan from Global Prime here. Thanks for watching this video. Be sure to leave a like, a comment below, and remember, subscribe to the channel and click the bell button to get notified of the next video update. And whenever you're ready to join my course and the mentor room that I run, then be sure to click the link below, sign up, and I'll do my absolute best to take your trading to the next level. See you on the inside.